good evening, everyone. My name is Angela Tor. I'm a geologist. Welcome to today's webinar, From Rocks to Revenue, Entrepreneurship, Innovation, and Startup in Geoscience. This session is proudly hosted in collaboration by the American Institute of Professional Geologists, the Geological Society of South Africa, the West African Institute of Mining, Metallurgy, and Petroleum, and the Geological Society of Zimbabwe. We are delighted to have such a diverse audience joining us from across the globe. Over the next hour or so, you will hear from leading experts who will share how geoscientists are turning technical expertise into viable businesses, disruptive technologies, and high-impact startups. Before we begin, just a few notes. Each speaker will have 15 minutes, followed by 5 minutes for dedicated questions. Following the presentation, we'll have a longer Q&A session for participants. Please post your questions in the chat. We will be monitoring them. Keep your cameras and microphones off for the duration of the webinar. This session is being recorded and will be available on the GSSA YouTube page. These are the speakers. We will post their detailed biographies in the chat for you to have a more in-depth look at. With that, let's get started. I would like to introduce our first speaker, Brenton Crawford. He's a chief geoscientist and technologist at the Data Rock, Australia. He's also the co-founder Data Rock. He also co-founded Data Rock in 2019. Please welcome Danny to the virtual platform. Danny, the floor is yours.
Great, thanks, Andrew. So thanks for having me, first of all, and yeah, I'm excited today to tell you a bit of my story as a founder, and some of my lessons learned, and yeah, hopefully answer some questions from you all as well. So hopefully you can see my screen and it's all sharing okay, and I'll just get going. So I think I'll start a little bit about my kind of early career, just to get to know me. So I'm a geologist and a geophysicist originally. Before 2015, I did a science degree at Monash University in Australia. I currently live in Melbourne. And I did an honours degree, and then I started a PhD and did that for a few years, but actually didn't complete and left that PhD project. And honestly, I really loved science, but I wasn't really cut out for academia. And I really kind of struggled with the idea of working on a very narrow topic for a lot of time, and really wanted to kind of look at a lot of different problems, all at the same time, and see, things that I would do actually happen in the field. So academia wasn't necessarily a good fit for me. And to be honest, I was really quite lost of what to do with myself, sort of around 2013, and decided to enter industry for the first time, and take a job in a mining company. I really loved my time working in a large mining company. I worked in nickel and uranium exploration on multiple continents. I got to travel, work in a great team. I really loved it a lot. And honestly, I thought I could just stay here and just live a whole career out inside a big mining company doing exploration, and been very happy with that. So I really felt like I'd found my calling and wasn't really on the lookout for anything new. But sometimes things just come up, and you have to take them. So that was around 2013, 14 that I was working in the mining company. And around sort of late 2014, I was working in my job, and I met two guys that shared my interest in data analytics. At the time, I was learning how to code in R. I was doing some sort of intensive short courses. And I was doing this for a reason that had nothing to do with mining. I was really interested in sports, particularly Australian rules football, which is probably completely unknown to most people on this call. But really interested in applying data science and data analytics to sport statistics. And these two guys that I worked with also enjoyed those things too. So we started in our spare time building algorithms and analyzing lots of data and having a great time. So we did that for a while, and then we thought, hang on a minute, maybe we could use some of these algorithms in our work. We had some pressing problems in our exploration department, which are problems still in our industry to this day. There was logging data that was subjective and untrustworthy in our organization, but we had lots of good analytical data. We had to regionally map large areas quickly using lots of multivariate data sets. And in general, we were sort of seeing the fact that people weren't very good at understanding lots of different data all at once. And these algorithms we were using on this sports data were really ideal. And so we thought, let's start doing this at work on our own time, outside of what was required, just to see what would happen. So we did this for probably 6 to 8 months, maybe even 12 months, and we thought we were doing fantastic work. The company we were in at the time didn't really see the value in what we were doing, and it was pretty clear, given that machine learning was not really mainstream at the time, that we just weren't really in the right environment to really take this to the end and really see what it could do. So in late 2014, we decided to leave that company and start our own. And we really had this feeling that this would change everything. And I think that if I was to impart my first big kind of thought is, if you don't have that kind of North Star here's a problem that's going to remain for quite some time and we think we can solve it. If you don't have something that's clear like that, then starting a business without that is quite a risky proposition, I think. So for me, we had this idea. We thought we had a niche in the market, and we thought, this is not going away anytime soon. Why don't we try and get ahead of it and make a difference? So our first business, Solve Geosolutions, it was the first data science consultancy applying their trade to mining in Australia. There were other groups doing it in North America a little earlier than us, but we were the first in Australia. It started in my living room, in our no office. We had no revenue. And quite frankly, we had no idea what we were doing. And that's okay. You learn along the way. By about 2016, we had 11 consultants. We had some pretty large clients, it was all really going quite well, and we were really pleased with the trajectory. But the downside of consulting, and I'll explain some upsides of consulting in a moment, but the downsides were that every month is a new mountain you have to climb. You're not building anything that just grows, and you really it's a hard life in a lot of ways. You have to work very hard, but if you do, you can do well. So that's the starting point of us building a business. Now, after saying that consulting is not all it's cracked up to be, I also wanted to talk about the other side, which is, I think consulting is actually fantastic, especially if you're trying to figure out what to do with your business. When we first started, we had no idea really what to do, and consulting allowed us to kind of softly enter, build a client base, get a network of people that knew us, and show our wares. But most importantly, it really allowed us to see where the holes were in the technologies that were inside mining companies, and allow us to quantitatively figure out where should the next product go. So to add to that, I would say that consulting is a great way to actually build up your domain. Even if you've worked in one mining company, you learn a lot working for a lot of mining companies, because they all operate differently. And from our perspective, we really learned that we needed really good scientists that had a small amount of ML, opposed to an ML engineer who we had to try and teach geoscience. So we not only learned where's the niche in our industry we want to go, but also how to hire people, the right kinds of people, and how to deliver on time and have a good rapport with clients. So Consulting to learn before you go to product, I think, is a really understated or underappreciated way to start things off. And we found it, it was everything for us. We would never have got to where we got to without doing that consulting piece at the start. And we still consult to this day because it's so effective in so many ways. So, what did we learn throughout this consulting experience? Well, we just waited for someone to ask for the same thing multiple times from multiple companies. And that particular request was, can you extract information from my core photography? I have all of these core photos all over my organization, and we do nothing with them. We just look at them. So, can you turn that into numbers that mean something? Can you add value to this data set that it costs next to nothing to collect? And we've been collecting it for 20 years. So we had 3 or 4 clients all ask for the same thing, and it took us longer than it probably should have to actually have realized that that was our product. And the clients were essentially demanding it, rather than us going out and trying to make a market for it. It was making itself. So this was the product. Now we had to do something about it and make it into something. So in 2018, we started a different company. It's called DataRock. And it was a geoscience software company essentially. And what we did was try to build a platform that could do computer vision at scale in a live way on those core photos. And we worked on this. We bootstrapped it for a few years, and what really became apparent was that it's very expensive to build software, especially back in 2018. I think that's changing a little now, but it was really expensive to build a cloud-based, microservice-based platform with live computer vision. And the Amazon bills alone to do this were very high. So we're going to need investment. We can't bootstrap this and build it organically. So then we had to kind of go down that road as well. So 2018, DataRock starts. If I would impart another piece of learning along the way is you need advisors along the way. Even if you think you know everything, you don't. And in those early days when you're getting started, you're very vulnerable in the sense that one bad choice could mean that's the end of it. So what we did is that we sought out a company that had a long track record of building software called Deus. We also sought out some experienced mining executives. Stephen McIntosh, who was an executive at Rio Tinto, kindly joined us as an advisor first and then eventually as our chairman. And we also had mentors and even asking our senior clients. We really did a lot of research and were very careful to make sure that we were being advised correctly. So I think that's a really critical thing. If you don't have good advisors around you, you can really stuff things up for yourself, to be honest. So what we realized is we needed several $1 million to get the product to the next level. So we needed to go raise some money. So with those advisors, we had some connections, and off we went on the journey of raising money. In terms of getting that funding, we wanted to not be pre-revenue, so we wanted to have a little bit of revenue, which we did. We took around 75 meetings with all sorts of different organizations that could potentially have provided funding. Venture capital was a lot of them. We had mining companies, some of the larger ones also interested in investing, and we had service providers as well. Through that process, you get very good at getting critiqued. It actually strengthens your business model and the way you articulate your value. Going through this process is really hard, but actually you come out the other side with some really good skills, and you can really you've really honed your point by that stage, and it's super helpful later down the track. So despite being painful, very important to talk to a lot of people. We eventually settled on a mining technology company called Index, and we agreed on a 4-year option deal where we had a planned exit, we had early funding, and because they were in the industry and had a global network, they could also help us with our sales. And we had clear metrics on what we had to hit to do well. So it ticked a lot of boxes. I would say in general, whether you are trying to sell a business or trying to raise capital, having a planned exit is a really nice thing. You may not get quite as much upside at the end, but you certainly have a known North Star to work towards, which I think is really a really good thing to have. rather than trying to do something at the end and not really knowing, what could happen. There's a lot of risk there. So we went with Index. It was an excellent decision. They were fabulous to work with. And we knew we needed around 4 years to get that sort of hockey stick of growth. And that proved to be, very correct. If we had have tried to sell it after 2 years, I'm not sure we would have been in the great position that we were after four. So picking that time frame is really critical. But it's a bit of a crystal ball. You don't really know, how long you need. It's one of those things you've just got to, go for it. So in 2021, we merged our Solve business with the Datarock business. We felt they were stronger together. We had investment from Index, and at that time we were around, I think, about 15 to 18 people, and we were ready to scale and take this startup into a scale up. So 2021, we merged the businesses, we start to scale. I guess the next part of the journey is the scale up. I think everybody, typically, if any entrepreneurs or founders out there, talk about the most painful part of their recent life. It's usually the scaling of a business, and it's because everything that used to work okay with 12 people breaks. The software breaks. You are trying to manage lots of competing priorities between cash flows and headcounts and sales. You feel like you're putting out fires every day and nothing is really happening. And our CEO, Liam, always used to talk about the flywheel. You push against this wheel trying to move it, and you push, but nothing really happens. And this is that point. And so it's really important to kind of be resilient, just keep turning up and keep pushing. And I think if I was to impart another learning along the way, it would be that this is the point where founders can sometimes get in the way, myself included. You hire people who are very good. They're sometimes better than you. And so you've got to get out of their way. You've got to get the right people in the right seats. And even though this can be painful, you have to do it, and you have to get your ego out of the way. Founders often want to control everything. It's their baby. But it's really important that you let people do their job, and you let the good people do their job as best they can. So a painful part is scaling up, but you have to do it to get to the end. And everybody goes through this. It's just part of the game. So to kind of wrap up, I guess, now 2026, we were fully acquired by Index. We ended up having around 85 staff. We had a few different software products that were generating kind of recurring SaaS style revenue. We had a large consulting team. So that never went away, even though we thought potentially it might shrink, but it actually grew. And it ended up, going really well. And yeah, we're really fortunate the way that things turned out. Having the right partner, the right sort of strategy, and yeah, it's remarkably rare, to get to these points and have everything kind of work out. So we're very thankful for that. So to wrap up, I guess go ahead. Sorry. Just to wrap up, I'll just make a couple of quick points. So the things that are nothing to do with work or yourself is being very fortunate and privileged to be able to take a risk like that. I made no money for multiple years in those early days. So having someone else who has a job in your family, like your partner, is really critical. So, that's something that, it makes it very difficult to do any of that if you don't have that sort of around you. Recognizing the gap, right place, right time, right moment, and really just finding the right people to be around you to support you is really important. So I think I'm at my time. I'll stop there, and yeah, if there's any questions, I'd love to have them.
Thanks so much, Brenton. It's really interesting to hear your story along the way, and I think as all the geologists on the call will have probably come across you at some point. There is a question for you in the chat. If the time frame for exit is narrower than what was needed to build the revenue and capital, what can be the next move?
Yeah, so great question. So, when we were doing our original kind of investment, we were really unsure. Some people seemed to want to buy, some people wanted to, help us grow. We were really in two minds at the time. I think, when we were raising, we had around only $500,000 of revenue or something like this, so it wasn't very high. Ultimately, you don't really always control all of those aspects. We had offers in front of us. We didn't have every offer we wanted. We had to go with, what was there. I think you can always keep talking and keep meeting with people if you aren't happy with what's presented. I think 10 years ago versus now, there's a lot more options to raise money. Mining technology is way more popular for VCs than it was 10 years ago. So I don't have a clear answer for you other than keep looking until you find what you think is right and believe in what you think, is right. Don't let them push you around, so to speak, which can be very difficult because it's a very asymmetrical kind of power position you're in. But yeah, it's a complicated question, but yeah.
Thanks, Brenton. There is another question for you. Can you give a bit more detail on exit options?
Yeah, sure. I mean, I'm not an expert in all the ways that deals can be structured, but essentially options are typically you have to perform and they'll acquire you if you do. And if you don't perform, then they have the option not to acquire you in its very simplistic form. So there's risk to that. You have to do well. Otherwise, they're going to essentially bail out on you or sell their piece onto somebody else. So you have to back yourself in that you think you can make that option sort of deal work. It's quite common that there's lots of variants of how they work and lots of nuances about the way deals are struck. But ultimately, it's fair to the investor to expect that you should do well to receive additional investment and eventually to be acquired. And there's no free lunch in this world when it comes to investment. So yeah, look, that's my simplistic view on options, but yeah.
Great. Thanks, Brenton. I think you're off the hook for now. There are no further questions,
Great.
but please, everyone, remember post your questions in the chat. If we don't get to them during the course of the webinar, we will come back to them at the end. We have a bit of a longer Q&A session. I will hand back over to Andrew to introduce our next speaker.
Thank you very much, Nathan. And thanks for the insightful presentation and answers. Let's keep our questions coming in at any time. So I would like to introduce our next speaker. Our next speaker is Taslim Salaudin, founder and innovation lead of Mesa Technologies, Nigeria. He is one of the UNDP Award winner. Join me, welcome Taslim with a virtual round of applause. Over to you.
Oh, thank you very much. Good day, everyone. I'm sharing my screen right away. Can you confirm you can see my screen, please?
Yes.
All right, thank you very much. So a quick intro about me. Just a minute. Yeah, my name is Taslim Salahuddin, and I'm the CEO of Mesa Technologies. I studied remote sensing and GIS. I love Africa. I love geospatial. I love geography. And I'm the founder of MuleSat. MuleSat is my, I think, eighth trial of running a startup in Africa. I've spent the last 10 years innovating within the space and failing several times. We've done a lot for Africa in terms of data and geospatial activities, and we're currently present in 2 countries. So I will jump straight to the topic because of so my session will be slightly focused on the context of a student or an early graduate who's trying to run a startup or trying to own a startup or is being inspired to start a startup. So I will start with the last spectrum. I will use like a story mode to explain it carefully. So pay attention. Ideally, in a typical African scenario, there are 3 kind of profiles you would see, and this profile transits from where you are as students to where you may be when you're running your own company. So I just give them some names so that we can remember them. So we have the solvers. They are this kind of students or young chaps that sort of like academic halfway, and they like their hustling the other way. So what this means is that they're in school, but they like studying partially, and they like doing business or side hustles partially. We have those that termed researchers. They like school 100%. They don't really care about work at all. They just read 100%. And we have the third kind of people that they don't even like school at all, but they're just in school because of society wants them to be in school. But they love hustling. Hustling in the sense of creating new things, trying out the new programming language, trying out different things. Now, the interesting thing is that our topic today is about the geoscientist, and you would see these three kind of profiles right from the days of your undergrad, actually. And you might fall among one of them most likely. But I'm going to explain slightly on these three profiles. And just don't put in your mind that one is good and one is bad. None at all. Everybody have their different purpose. So I will run through each of them to see how they turn out to be. So in case you are one of this profile, you understand how your journey might be structured. So mapping the also from, so balling here means billionaire, please don't mind me. So the first person in the solver, these are like three core attributes that they might face. They usually spend short time learning and short time applying what they've learned. Short time, I mean 1 to 3 months. So if you got something new in your class or in your research online or something, then you just go and tell a CEO or a company that, hey, I can solve your problem. I know this. So they are quick to just learn something quickly and go straight to go and see how they can use to solve someone's problem and make some money. So that's why it's called the Hustler profile. They just want to make some money quickly by learning something fast within the geoscientist spectrum still. Number two is that they create solutions for small, medium, and large companies. Now, they don't really care whether you are a CEO of a big company or small company. As long as they can solve your problem, they get paid and they're good. And then third is that they end up seeing which of this problem is reoccurring and try to build a product around it later in the future. Now, these three steps might go across, say, 10 years span. Maybe the first 4 years you're in school, you're learning and applying. After school, you're working for several companies simultaneously, almost like consulting. Then after a while, you figure out what exactly people ask from you the most and build a product. This might be like a 10 years sort of journey just within these three steps. The second person is the researcher. They take long time spending in schools, learning, reading, getting maybe one of the top grades. And then after a while, maybe go for their masters. Then after a while, they work for a large corporate company, learn a lot about corporate structure and everything. And then later on start their own company, which is also in the geoscience industry. This might stick about maybe 10 to 15 years literally. Then the third is the creator. The creator, they just like to build things quickly and they will build and fail. Maybe try their undergrad, they're just building stuff, trying new stuff, checking out the new language out there. And then later on, they found out that they would love to build something that's useful for the first time in their life of trying to build things. And after that, find a market fit. That is, they figure out one thing that could really solve problems. Now, if you notice something, every three profiles solve something at the end of the day, actually. But they all have different paths. So the baseline of this story is that for those aspiring to become startup founders or entrepreneurs and everything, your path might be different, might not be the same as your next colleague, but understand that it's quite unique if you understand your journey and who you are as a person. Some people might love to build and not even read much. Some people might love to read and build. Some people might just love to read entirely, but they end up contributing to the grand scheme of things. So whatever your path is right now, you shouldn't be shy about it. You should just keep on this straight journey as long as you are sure of what you are doing and the likes. I would love to summarize this for the scientists and how it applies. When you want to start a startup that you believe will be sustainable and grow very well, the first thing is to pick a good team that's complementary to yourself. Now, I mentioned these three profiles because if you are one of them, try not to pick someone that is the same profile as yours, right? The person that the solver profile might be a very good person to tell you what the market is currently demanding at the moment. If you are maybe someone that like researching. So whichever profile you are, trying to get someone that's complementary to you because they spent the last 5 or 6 or 7 years in a different dimension that you haven't spent it in. So they are complementary to your team. That is very, very crucial at the beginning point of your startup journey. Second is to solve for a customer who can pay your value. Now, this recommendation is typically those experiencing the African culture, whereby you might not get enough financial support at the beginning of your journey because you are building in the geoscience space. It's really a bit early here in Africa, and many people don't understand the context unless those that are experts and a very niche sector. So what you might want to do is take your team, go and meet a company and say, we can fix your problem. Let's fix so they can afford to pay you well for what you're doing, right? Because I like saying something, if you're hungry, hungry men don't dream. So you have to be sustainable, either by someone funding you with investment or fixing the customer's problem and then getting paid for it. That was the route I used personally. In Millsat, we have never raised investment before in the past. We've always solved our customers' problem and they pay us for it very well. To them, it solved their issues. To us, it's our pilot, but to them, it gives them value. So that way, we are sure that we're fixing a realistic problem for every customer that we serve. The third is confirm how many more of this customer exists out there. So after fixing maybe one big company's issue, you might look for their competitors or other people that are around their sector that need the same solution that you just fixed. Now, most likely they'll buy from you, and you can use the first company as what we call a borrowed integrity to build up your case study for the next customer you're going to. Now, this journey will give you a lot of strong traction in terms of you fix ABC company problem, that means you can fix the next company's problem. The fourth step is to convert the solution into a scalable product. Notice I didn't say you might not necessarily build a product from day one, but you might offer a solution from day one. They are two different things. Let's not confuse it. Giving a solution is just, I'll tell you my problem. Give me a solution to my problem. That's what I want as a CEO. And you did that for me, and I paid you for it, and we are good. But as you keep on doing these solution iterations, you might figure out that, oh, there's a way we could put it into a product that someone can find us without calling us. They can sign up, use it, and pay us without calling us. Now that is a product, and it's scalable. So for people in the geoscience space, most times your journey might have to look like this. In a summary, it's like you consult with your knowledge, you figure out how to harmonize your solution in a way that can be put into an autonomous flow for someone else to use it without calling you, and then you scale it. That is usually the pathway because of our sector is not as popular as like the fintechs or like the health tech and everything or ed tech out there. So this is might be the route. Some people just stop at solution and keep on servicing them. But if you want to scale and become like multi-million and everything, then you have to build that solution into a usable product that someone can use without having to call you anymore. That's the first step for scientists. There are a few points I will touch before I end my slides is how to be a startup for geoscience. Just some few touching. So the market in Africa is quite big, interestingly. So because I played this for the last 10 years, so I've observed it carefully. There's over $8 billion spent in different ways that you can benefit from as geoscientists. And they are very intertwined. The mining space is one, but within the same mining, there are many things complementary to it. Remember I said provide solutions at the beginning, so you can have enough sustainability to grow your product down the line. So there are six very interesting space in Africa that is currently trending as we speak, and they are all interconnected, sort of. And as geoscientists, you can play on any of them and apply your solutions to them. And interestingly, if your solution works for a sector, it might be interesting to find that it can work in another sector, only that they call it a different name. So when you are exploring how to make your discovered solution or product valuable, explore cross sector value proposition. You might get to interesting to see how it applies. For us in Millsat, our solution applies to all six simultaneously because we play in the raw data space where we harness data that you can't find on the norms on Google, and we use to generate intelligence for you for your business to make more money and to remain compliant. But yours might apply to me just one or two, depends on how you've built your solution. But remember the step, always solve for someone first, and they must pay you well first. The flip side is that if you solve for people that can afford your value, you yourself can't grow because there's not enough finance to do that. This next is balance. Understand these 3 points of things, especially for those working in Africa. You need to balance business, tech, and politics. The moment you move out one of them, you might end up being crushed by the absence of your of no by the ignorance in any of these pillars. You might have a good business model, a good technology product that is scalable, but you never understood the politics around that geographical area they are playing within. That might be your death trap. You might have good political awareness, great business model, but zero technology. You won't be scalable. You will be doing a solution at that point in time. You can't scale it without you being at the middle. And a successful business is a business that can run without you being there, and you can see generate your revenue going forward. That's a successful business. So always be aware of these 3 things, no matter where you are playing in, no matter what geography you are playing in. I'm particular about Africa because that's where I'm very familiar about based on experience in the past. Other continents might be slightly different, but this is what I'm very sure about for Africa where we're playing. Um, the last will be the needs. You need to understand your want, your what and your who. Is just what are you selling and who are you selling it to? You see, if go to the route of solution providing at first, you will have understood that, oh, I currently selling ABC algorithm and I sell it to mining operators. You are very clear because you've done it in the past during your iteration phase. But now when you're now a product, you can really say, this is what I'm doing and this is who I'm doing it to. You can be and the clearer you become, the faster you could make your sales. Yes, we've done this in several sectors. Like recently, we applied it to the mining space where we're trying to mine out, we are trying to profile artisanal miners across all mining sites in West Africa. The intention is to give fintechs and insurance companies the KYC of artisanal miners so they can give them good services. Now, look carefully how this product in context applied across sector. So we understand geoscience in the mining space, but we choose to ensure that we gather data about the mining site, what is being mined, and who is mining. And then we expose that information to other parties in other sectors, that's fintechs, insurtech, and equipment tech. That's people that produce equipment, people that provide capital, that's the fintech, and then people that provide insurance for health. And it's what we're currently performing by Timbuktu to scale up. Now, you notice that we didn't just go purely geological and the likes. We found value in exposing what we do in geoscience to other people that don't understand geoscience at all. So this is one of the examples to prove that you could do a lot as a scientist if you look around your cycle and understand what you have as a value to begin with. Thank you very much.
Thank you, Tazalim. Great presentation. Some wonderful insights there. Please, if you have any questions, don't forget to put them in the chat. We've got a few already. If I just scroll up here. Did you experience a situation where the enthusiasm you started with dwindled? And if that's the case, how did you manage to get everyone back on track?
To be honest, I think that feeling comes and go like your seasons of climate, like maybe once a year or twice, because you always feel like you are out of energy actually. So as a startup founder, you will get used to that kind of feeling actually. But it dies down to what's your source of motivation. That's what makes you come back up again. If your sort of motivation is just maybe your friends or maybe some low level motivation, you might not survive that far because for every level you scale into as a startup, you get that same feeling. Even when you get bigger and bigger and bigger, you get once in a while feel that kind of downtime. And my advice to coming back up is what I've always used, the reason why I started actually. Because our journey was to fix some data on unavailability gap. So if each time I check that have I done this or not, and it's a no, I keep on moving. I keep on trying again. And lastly, there was a clear success definition. So if you can define your success, what success means to you from the start, you would always know if you are there or not. then that way ups and downs won't affect you much. So if I say I'm successful when I'm able to fix 17 countries' problem with this algorithm, you have stated your successful vision very clear. You would have a very clear focus and you will enjoy your ride. But the ups and downs is just something you should expect by default.
Excellent, excellent. Please keep the questions coming in the chat if you'd like to ask. Got another one here. And someone's asked, for the balance part, should I first get knowledge on business and politics before building my idea and bring it into existence?
Oh, no, no. That's why the first step was to get a good team. Now, someone that loves reading might know about political affairs way better than you that you're building from day one, right? Someone that does the server profile, the one that reads a little bit and goes to the market every single now and then, that one might understand the current business demand and how to price because he has priced wrongly in the past. So the person that did this academic research might know about politics more than you do, funny enough, because maybe he reads more than anybody. The one that is a creator might know how to build tools even better. That's technology. So you see, it's more of a team thing than a single person thing. That's why most people love to invest in a team, not a single person startup. But let's say, for example, you are alone and you need to find these people in time, you can start. So like they say, it's if you wait for permission, you might not start. So you just get started and you can learn on the way. But be aware that you need people to complement your strengths as you are moving. And that's why the last week I talked about advisory board or advisors or mentors. They would guide you because they have passed the journey and they have succeeded in what you're trying to do. So they can tell you ahead of time what you're doing wrong, especially when you are alone as a solo founder. Thank you.
Great advice. So of course we've got a Q&A at the end. So if you have any more questions, please keep them coming. And I'll now hand you back to Andrew for our final speaker.
Thank you very much, Sanko, for that question.
Sorry, Andrew, we can't hear you.
Yeah, thank you very much for those questions and that you got from the chat. Tasni, you did a very fantastic presentation. So now let's move to our final presenter, Danny Donahue. He's the head of growth of Terra AI USA, previous founder of a seed-stage B2B software as a service startup. Join me, welcome Danny with a virtual round of applause. Danny, the floor is yours.
Hi, can everyone hear me? My name is Danny. It's nice to meet many of you. Paul, Andrew, Natalie, thank you so much, and thank you to the previous speakers. My name is Danny Donahue. I'm in the airport right now, so I apologize. I'm getting back from the PDAC convention in Toronto, where we spoke with a lot of great mining companies and investors in mining about exciting cutting-edge technology from California that we're deploying in places all over the world, including Canada, Africa, Latin America, and everything like that. So I'll kind of just start out by giving a little bit of background about myself. I, as Andrew described, I was a previous founder of a company that did not have the perfect exit, did not go perfectly well. And I ended up consulting for mining companies who were trying to build tech products because I had previous experience building technology products in the United States for a venture-backed tech company. And so I have a degree in geology. I have this background in finance and technology in the US, and was looking for something exciting to do. And I realized that very quickly that mining companies were not going to be the ones who were going to build technology. It had to be young, hungry people who actually could go out there and solve problems late at night, on the weekends, that sort of thing. And so I'm involved with a handful of companies. I'm involved with Durin Mining Technologies. So that's an automated drilling startup based in Los Angeles using robotics to make drilling very efficient. I'm involved with a company called Ilium, or I guess Atlas Park, who just signed a deal with the Congolese government to digitize a lot of their old maps and data and bring new districts online in the Congo. And I'm lastly involved most full-time with a company called Terra AI, and that's the one I'm going to be speaking about today. While I wasn't the founder of Terra AI, I've been involved with the founding team for a very long time now, almost 2 years, or I guess over a year full-time. I was an advisor previously. But needless to say, I've got kind of a great perspective on venture, startups, the ecosystem, and geology. So I'm very happy to be here, and I appreciate the organizers having me. Let me just pull up a slide really quick. And please feel free to answer questions or ask questions or interrupt me if you have anything exciting to add. Okay. Give me just 1 second here, team. Can everyone see my screen?
Yep.
Great.
Yes.
Yeah. So this is a presentation that we give to audiences kind of all over the world. But at a very high level, Terra AI is the concept that we can build thousands and thousands of geologic models instead of just one. So we've essentially taught a purpose-built AI platform how to form geology in the subsurface. So it's not based on like a big data approach, like an LLM or something like that. It's based on the actual physics of how deposits form. We don't go out and try to match porphyry deposits in Chile to porphyry deposits in even the US or even neighboring parts of Chile, because every porphyry is unique. So what you really need to teach an AI in a situation where we have imperfect data or not enough data is how to actually create these from scratch. And what we do is we match that data that we observe to the models. So we say every model must observe the right data. Every model must produce our geologic concept, i.e. a rifting basin with two faults in the southwestern United States. These are completely synthetic geologic models. And then we ask it, well, now you must create models that look like this, that match the data to 85 or 95%. And so what that allows us to do is create probabilities over every possible parameter, because we're not doing geostatistics. We actually have models that match every single one of these data concepts. And so for our understanding of the subsurface, we have actual models to back it up. If I think as a geologist that there's a probability that there's a 20 megaton resource here, and I also think there's a 10 megaton resource here, and I think maybe the faults are controlling mineralization and actually maybe they're not, let's model out all of those outcomes. Let's do it again and again and again until we get the full spectrum of possibilities. So this is what we do. We take all of these, and this should move in just a second here. And we're able to create these probabilistic curves over different concepts. And so this technology is unique. This wasn't like taken off the shelf. This came out of a Stanford research lab. Pretty unique setting Stanford is for essentially bringing together deep AI folks from different verticals. So like a lot of the concepts here were borrowed from biotech or self-driving, where we have to make sequences of decisions. We also work in oil and gas. This is an oil and gas example. Actually, this might be geothermal. But so the data fusion piece and the matching to observed data comes from the world of biotech. It's very similar to how proteins are designed today. And then the drill targeting piece, where we're targeting drills within this kind of broader uncertainty space in the subsurface, is most akin to self-driving. And so let me just see. Yeah, let's just skip these. And so we were originally backed in our seed round by Coastal Ventures, which is one of the big tier 1 firms out of Silicon Valley. And we've also had some strategic support from Rio Tinto Ventures and BHP Ventures, who've also come in. And we've gotten grants from the U.S. National Science Foundation, but we also work with a variety of great companies. I'm going to stop sharing my screen here really quick. So the original founding here was based on the idea that, what's really holding us back is the fact that we're examining data separately and losing insights. And so there are really great orthogonal data sets where, you have magnetotellurics, you have DCIP, you have seismic, and all of these tell you different principles about the actual subsurface, but they don't actually tell you what's down there. They'll tell you a sort of a signal coming off of the truth, but they don't tell you the actual truth. And so what John, our founder, set out to do was he was one of the guys at Kobold. He wanted to take this science further and bring it into industry, take this science even further, and essentially let not just Kobold use this in some of their projects. He wanted to do the Gen AI piece, not just the drill targeting piece. So the kind of advice I would give folks is go, if you are thinking about the venture route, go to venture early. I think one of the mistakes that people make sometimes is they say, well, it's not ready yet. I'm not ready to go to investors. I'm not ready to talk to people yet. Just go early. Get out there. If it's an idea and it has traction, it will get interest, it will get funded, it will get clients. If it's not ready yet, then the answer is you just need to keep changing your idea. You don't need to keep polishing your presentation. You don't need to keep changing your product. Like, get out there, get early buy-in. And if you don't get that early buy-in, the answer isn't keep polishing and changing. It's find the right people. Like, put yourself in the situation to have an investor who says, I'd invest in this product before it's even built. Or a client who says, I'm willing to give you time or money before you even have a product because I'm so excited about this. So keep pivoting, keep pivoting, keep pivoting. I'd also say that the other lesson I've taken from this founding experience is if you're founding something in the deep tech space, in the sciences space, you really need to have a novel piece of technology because we are selling to scientists. We are not selling to IT managers or salespeople. We are selling to scientists. And so, your reputation matters a lot in this industry. You really can't be seen as selling snake oil. And so I strongly recommend working with universities, finding researchers, and looking in other domains. That's probably the big lesson here is that we can look at other domains to pull, where's AI pushing things forward in the physical sciences? Where is it, where are we having progress in similar problem sets that we can pull in to solve the geoscience problem set? Because frankly, we're not going to be leading the charge in any of these things in the mining world. We should be taking lessons from other folks, especially oil and gas. I think the funding journey has been interesting. I'll kind of touch on that. So we raised a seed round from Khosla, built on that for a few years, really just focused on building the tech with a few early customers who were really bought in. Tons of buy-in, not just like hey, we'll pay you for this if it's built, but truly, looking for partnership early on. We then raised a Series A to go out and productize this technology. So, the difference here is that when you begin, you might have an innovation, but you're not really sure, can it scale? In the beginning, in deep tech, it's a little different from normal SaaS. Normal SaaS, they just say, we'll start selling, try to get as much revenue as you can. But in the world of deep tech, you actually have to produce something innovative. And so the recommendation is, well, worry about actually solving a problem before you go out and productize this and trying to get tons and tons of customers. It's a little more akin to the R&D journey of a university than anything else. I think my sort of meta recommendation for the folks on this call is Africa is uniquely positioned to benefit from the critical minerals challenge. The essentially geopolitical concerns and all these crazy things we're reading in the headlines, Africa will benefit from in a huge way. But the core problems that I see holding African countries and entrepreneurs and mining companies and exploration back, and we think about this a lot. We think about this with the US government. We think about this with our friends and partners in oil and gas and minerals. The thing holding a lot of Africa back is that it's very underexplored. I think the Congo has 5%. 5% of the Congo is explored, and even less is digitized. Startups that have actual problems to solve, a technical moat and access to data are going to win, because the mining companies of today in the West are really, really focused on being more tech enabled. I mean, I know it sounds crazy, but they really are. And so, to the entrepreneurs on this call, if you can figure out how to drive a wedge between, with some sort of competitive moat and some sort of access to data in Africa, you will find success in, maybe not the traditional venture funded route, but you will find success as an entrepreneur. And recognizing whether it's a venture backable business or this is just a great technology software business for you is hard. I strongly recommend just not worrying about getting everything perfect and just getting to work and producing something interesting. And yeah, I think that's my overall advice. I think I see a question. How do you strategically position yourself to remain competitive? How do you approach the possibility of takeovers from larger players targeting the same market space? Landwa, is this specifically about Terra AI, or is this more of a general question? Okay, I'm not hearing any responses here. So I think the truth is that there aren't many great, like large, successful startups in technology in the mining sector. They just don't exist. Like there hasn't been a Google that has emerged from the mining sector. There hasn't been a Palantir. And so I really wouldn't worry about competition relative or takeovers or anything like this, as much as I would worry about, like, can you actually get enough market traction in a few years with a very slow moving industry? And what that hinges on is, again, just truly scientific innovation. For Africa, which part of the mine value chain do you think needs a lot of innovation, especially in AI? So there are a couple AI concepts being applied right now in exploration. I'll speak about exploration, and I'll sort of speak about the midstream. So in exploration, there's the prospect stage targeting, problem set where we have huge data sets, and we need to find and down select targets. And there are a number of venture-backed companies in the West doing these kinds of projects. I mean, Cobalt has a tech stack built around looking in huge data sets to find, needles in the haystack. There are some other companies doing this as well. I think this is not the core problem, right? Like, we have a lot of prospects. If we need more prospects, I could just go to Indaba and talk to anyone, and they have 10 prospects for me to look at. The real challenge is determining what prospects are good and making decisions faster. This is the thing I'm consistently hearing from exploration teams at large mining companies, is that they just need to get better and faster at making decisions. For the majors, it's because, they need to find new deposits because their existing stocks are declining and discovery rates are declining. For a junior mining company, an explorer, they need to get faster at making decisions because they're diluting themselves because money is so expensive for juniors. So every year they're diluting themselves 20%. If they can get better at walking away from a bad asset or doubling down on a good asset or drilling more aggressively, that is going to move the needle for the entire exploration market, for which funding is really tough. I think in the midstream, this is where founders can see really immediate engagement from mining companies and processing companies, because any AI innovation in the midstream where we're processing and we're doing flotation and all of this, those are immediate revenue impacts. AI for mine design, AI for crushing better, AI for maintenance. These kinds of solutions have immediate impacts on mining companies' bottom lines. And so industry engagement is just so much faster. But again, there's been a lot of technology and a lot of attention thrown at this. So I'd say, like, there's a lot more white space and exploration, especially around making faster, better decisions. I saw DataRock was on here. I would say that, these kinds of solutions are phenomenal for making better, faster decisions and getting more information from more knowledge from less data. But if you want an immediate impact, go to the mine face, go to the shovel. You will have immediate engagement because of the revenue. Has Terra AI been used in every aspect of geology so far? So we have been used in mostly target screening, resource characterization, right? We produce 10,000 geologic models for a site in 2 hours. It happens very fast. And so what that allows us to do is screen targets really well. So if you have a subset, a 10 by 10 kilometer subset, that's a really good use of this tech. You could say, well, what's the probability of this being a 10 megaton system? I think we've been used in active mine sites as well to find new extensions of ore bodies. One of the things we're really excited about this year is extending this into grade control and the more geotechnical stuff. I see someone mention geotechnical, essentially doing probabilistic mine planning way earlier in the process to determine, where we are in the cost curve before PEA, right? So can we drill to disprove a mining technique or prove that we can do open pit here? If we can't, then let's walk away because that might be too high cost for us. Landwa, Danny, I see potential for your company to make a meaningful impact in the Bushveld complex within the PGM sector, where potholes remain difficult to predict and manage. Have you considered South African PGM producers as potential clients? We have a backlog of clients to work with. We don't have any foundation models for PGM systems. So far, we just have copper and gold, set-hosted systems, porphyry complexes. We can do heavily faulted systems as well. Regarding your predictive model, how do you validate and reconcile your forecasts against actual geological outcomes? Do you have scalable and reproducible margins of error that you demonstrate the reliability of your predictions across different mining ore bodies and mining environments? So maybe I'll just share a demo really quick. Let me see if I can pull this up. Can everyone see my screen okay?
Yeah.
So the way we do this is quite simple. Every geology we produce, we forward simulate the geophysics for. So let's just do geophysics only. Every single model I am producing here, this is a 2 rounds of faulting kind of porphyritic complex, but we're not telling it it's a porphyry. We're just telling the situation. This is the geologic setting. This is a high-grade core, this is a low-grade core. This is the P50 outcome, right? Or sorry, this isn't the P50 outcome. This is the P50 outcome in a second here. There you go. So that's the P50 outcome. But every model we produce has to match, with a certain degree, the observed geophysics. If you see here, we're flicking through AI-generated geologic models, and all of them more or less match the magnetics and gravity, and they also match, if we had drill cores, they'll match the drill cores, right? So this is the domain of a geologist. This is our job, is to go out and produce models that match the data. We, as a geologist today, with AI, can essentially parameterize how it produces these geologies and then tell these models, you actually need to observe the data much more for the geophysics because I really trust the geophysics and I know the sensor isn't that noisy. And you should really maybe not match as much the historic drill cores because I'm not totally confident in their rock codes. And so the role of the geologist is evolving from designing the models to now essentially parameterizing the models. We're going from I'm typing a document in Microsoft Word to I'm massaging ChatGPT to tell me how to craft something, and ChatGPT is doing it for me because AI can do this at scale day and night. We can do thousands of these. And so in the aggregate, what we do is once we trust those models, once we trust the fact that every model it's producing is legit, we like these models, they match the data, they're within an observable 85 to 95% data match across every mode, we get these aggregate mean fields. So across all the models, what is the 50th percentile outcome for a certain grade of copper? So this is kind of what we do. And we build in validation step after validation step into this system. Danny, are the data sets limited to some continents? No, we do not. There's no like big data here. What we're doing is if you have data on a site, you bring it to us. We will produce models. We will produce drill targets to optimize for a certain, uncertainty reduction over a certain parameter within those models. So if a company comes to us with a model set in Kazakhstan or Peru or Cameroon, it doesn't really matter to us. We can run this on just about anything. Someone has a bentonite property and needs to find partners, investors to move forward. I think, Natalie, you want to pose this to everyone? Do you want me to take a stab at this first?
I think while we're on it, we can just move straight into the general Q&A. So you can go first, and then our other speakers are welcome to contribute.
Yeah, I mean, look, the truth is if you have a sort of greenfields property, my advice is to bring in an explorer. Like there are explorers for hire to do this. Probably the best thing you can do is trenching, geochemistry first. It's very cheap. And then try to pull in and organize as much public data as you can. There's so much public data out there. And if you organize this well and make it digestible, then I think that's really what it comes down to is like investors see a lot of assets. If you make it easy to diligence and easy for the story to come out, that's very cheap for you to do. You can collect simple data like geochemistry. You can get public data. And if you put it together in a data room really well, that's already differentiating a greenfields asset from a lot of the things we look at, which are really, really archaic data sets, really hard to diligence. And that's what holds back a lot of investment in this space.
Thanks, Danny. Taslim or Brenton, do you have any additional comments on that?
No, I think Danny answered it really well, and I agree with all of that 100%.
I'm not sure if we've lost Taslim.
Oh no, I'm here with you. Sorry.
No problem. Did you have any comments to add to that one?
Oh no, I don't.
All right. As I mentioned, please ask additional questions in the chat. I see there's another one. Oh no, sorry, that was Andrew. But please feel free to raise your hand also. Don't be shy. They won't bite, I don't think. Lovemore, are you able to take it from here of the questions? There's another one in the chat.
Yeah, I can take over from here, Natalie. Thanks very much. A question from one of our participants. Is any of you working on solutions for small scale and artisanal miners?
Okay, yes, I think I'll take that. So I think we're just currently working on a pilot with the UNDP under the Timbuktu funds, where we are currently piloting artisanal miners enablement across Nigeria, Kenya, and Nigeria, Kenya, and most likely Ghana. So the intention is to enable a live database of artisanal miners where they are working and what they need to get as support, either from donors or from their mining companies directly.
That sounds very encouraging, Taslim.
Yes, thank you.
Thank you.
Yeah, we don't really work with artisanal miners, mostly because artisanal mining is occurring in set hosted systems like alluvial systems, and you don't really need AI to find to find alluvial gold. But I do think this, like at large, the meta comment here is that software is getting increasingly easy to build. And so while most of these solutions are available for well-funded mining companies today, in a matter of years, I'm imagining that a lot of this is going to go down to even the lower levels of the smaller scale of this industry.
I was going to say we haven't really worked for artisanal miners, but we're certainly using the mapping where artisanal mining is occurring as an exploration vector for larger companies. So certainly done a lot of that work using remote sensing and satellite imagery. So that's probably all of our involvement with artisanals.
Another question. What excites you most about opportunities for geoscience tech AI over the next few years?
Speed, like truly. I mean, biotech is probably the best example where it used to take 15 years to design a new drug. Now it takes 10 months. Every single technology solution out there is going to play a role here. And I think 5 years ago, the industry was not woken up to this, but now they're starting to see the big picture coming together where, supply just isn't there for a lot of the elements we need, and discovery rates are down. And so the adoption curve and the attention and the budgets are actually coming for solutions like, Datarock, TerraAI.
If I could add to that, I'm going to not say AI because I think it's been spoken about a lot. I'm going to talk about more of the sensors. I think there's just an explosion of incredibly good sensors that are arriving in the mining industry at the moment. Downhole, it's quite incredible what can be done. Things like downhole libs, downhole XRF. There's going to be so much data coming in that's able to just change the way we do everything. Things like core, like drill core and things like this will eventually they'll just leave the industry, which would be unthinkable just a few years ago. So it's super exciting from a sensor perspective in my perspective.
Yeah, I think on my end, what excites me the most is so geoscientist activities is currently being appreciated of recent in Africa, and that creates a massive opportunity for those with the skills. And the only thing is your exposure towards people knowing that you have the skills of geoscientists, because most people have covered themselves with other brand names across other sectors due to the slow involvement of geoscience adoption in Africa. But I have seen that there are more demand for these skills because people are getting to realize the importance of it in their activities. So the opportunity I see here is human capital first. People transitioning from their normal AI building to geospatial enabled building that would literally move some of the industries further. And then next I see is a bigger attention to investors towards people working in this same space as we are showing traction of success as we move forward. Thank you.
Okay, an interesting question here from one of the participants. Usually, thousands of models are produced by AI models, which tend to overwhelm the geologists on site. And at times, many go back to the traditional ways. Do you have advice on how the traditional geologists can adapt?
Well, we don't build, you don't want to look at thousands of models up front. You want to look at 10, 20, maybe even 100 models up front, and then build trust in the system. And then produce models at scale. I think the number one thing is, as a traditional geologist, you are supposed to be a skeptic. And if there's an AI company that can't let you put in human expertise or can't allow you to trust the models, or they say, oh, this is this sort of black box, or I can't tell you how that works, that's maybe not a company you should work with. So continue to be skeptical, but also be curious. That's one of my favorite things about the job.
If I could add to Danny, I would say, when we're talking about multiple models, what we're really talking about is geological uncertainty, and geologists are very good at, understanding and conceptualizing uncertainty. And I think that there are a lot of tools that within AI and data science that allow us to understand uncertainty quite well. And I think that as a geologist and as a scientist, it's your job to get to grips with those tools and the way to understand complexity. So I think that rather than going back to the traditional ways, embracing these new technologies, but realizing you have to do some work to make sure that you understand them and can be critical of them, as Danny said. So yeah, that's my position.
Okay, I think related to the bentonite question, would you recommend going to existing producers to move your property forward, even though the deposit might be in direct competition with the existing producing properties?
No, no. My recommendation is if they're existing producers, they're going to want a pipeline of projects because they have a mine life, right? But the big question would be, um, you know, is is this too early stage for them? Because a lot of producers don't do a ton of exploration, or they're just focused on expanding their asset and not taking up new stuff. Whereas, explorers go out and this is their job is to add enterprise value and then, exit the asset.
Many startups struggle with managing money, especially in the early and growth stages. How did you make sure your finances were well managed to support growth while also staying compliant with tax and other regulations?
I can probably, I feel like I want to answer this one because this is something that's very important.
Jump in, please.
Yeah. So I can tell you that, on our initial, exec that we had in our startup, we had lots of people with very little experience, but the one person that we hired that was the most experienced was our chief financial officer. They are absolutely critical to every facet of your business. And I think having someone who knows what they're doing in that seat in your business is absolutely priority number one. So, yeah, that would be my position because most founders are not accountants, or from a financial background. You need someone who knows what they're doing to guide you, and if you don't, you can get yourself in trouble really, really rapidly. So, that's my thought.
And even if you're not in the position to have a CFO, I think like a chief of staff, just hiring someone really type A to manage, essentially the actual bones of the startup, like absolutely. Like these are the most critical hires you can make at the beginning.
All right. Let's see. All right, this is a compliment. Danny, Taslim, Brenton, thank you for the informative presentation. Oh, somebody's dropping off. Okay, all right. Not a question, really.
Thanks, Lavmo. I think we have officially run out of questions, but
Yeah.
you are welcome to reach out to us. I think I will double check with the speakers after this, but I think our speakers are very open to communication with anyone who has any further questions. But let me not promise things I can't just yet. I did post in the chat box there that the recording of this webinar will be available on the GSSA YouTube channel. So you're welcome to subscribe to that to see when it comes out. I think we're going to call it there. We have made good time. So thank you very much for our speakers for that. I just want to say that on behalf of the AIPG, the GSSA, the WAIMM, and the GSZ, that we'd like to thank our speakers for a fantastic session, especially coming off the back of a lot of talk coming out of Indaba here in Africa, all the way to PDAC that's just ended now in Canada on the other side of the world. It's fantastic to see how your ideas have actually come to life. Participating in a lot of these sessions myself, it is a lot of talk, and ideas. So it's really great to see how these have transformed and translated in real life scenarios. So Brenton, Taslim, and Danny, we really appreciate your attendance and all the time you've put in during your travels and sleep deprivation. So thank you once again for all that. Once again, also, as always, these sessions would not happen without our participants. So we really, really thank you for joining us this evening, this afternoon, this morning, wherever you may be in the world. Danny, you're about to miss your flight.
Yeah, I am.
We're nearly done. Just lastly, I'd like to thank the organizers of this webinar series also. It wouldn't happen without all of you. So Andrew, Lovemore, Lawrence, and Paul, thank you very much for your contributions this time around. And be sure to keep an eye on all of the platforms. We intend to keep these sessions going. So keep an eye out, and we'll see you at the next one. Thank you very much, everyone, for your time.
Thanks, Natalie. Appreciate it.
Cheers.
Thanks.
Bye-bye.
Thanks,
you.
everyone. Have a great day.
Yeah, thank you,
Cheers.
everybody.
Thank you.
Cheers.
Thank you so much.